Okay, Jonathan Fibonacci here. Let me give you my perspective. In fact, pick this up. Talk to you about the market, making some money. You need a little Jesus in your corner. You know, and I've been day trading. I've been in and out of the markets for 20 years. And, of course, I offer day trading consulting and teaching. And, you know, whether you're a hedge fund, whether you're a private boutique in Sausalito, California. I'll tell you a funny story. I once applied for one of the jobs where they literally said, okay, will you stop applying, was a hedge fund in Sausalito, California, which is San Francisco area. It's one of my favorite areas, and of course I am a trader. And traders are really like boxers. And there are money manager types that they have their 6, they're 63, they have their credentials, but they're not really traders as much as they are managers. There's a difference between being a money manager and a trader. What's the difference? In fact, I may send them this as a resume. Say, remember me? You told me not to apply? Okay, here you go. This is Mike Tyson fighting Peter McNeely. If you remember, watch this. See, I'm about to make a connection between the market is like this fight. That's the market, and that's the amateur fighter, Peter McNeely. So don't be a Peter McNeely. This guy. Don't be this guy. And if you remember, this was Mike Tyson. I'm a boxing purist. I grew up watching Mike Tyson with my granddad, and you know, the market is for the amateur very similar to this fight, Peter McNeely. Remember, this fight only went 5 minutes and 16 seconds. This was Mike Tyson's first fight after he got out of prison. He had spent a lot of time talking to Jesus, or his Jesus, his higher power. And this fight, most people knew, was just kind of a welcome back Mike Tyson. And we're going to give you a little lamb to kill. And this lamb is Peter McNeely. And I want you to see this fight from a day trading perspective, because for most people they're good, but they're not a fighter. They're not Mike Tyson like. The market will destroy you. And that's where I've been for the last 20 years, of moving in and out of the markets, taking savings and growing it and losing it and learning and adding to my skill set. I remember when I first discovered Japanese candlesticks and how I was kind of a private money manager for a dentist, and then eventually started trading a little bit more, and then I learned about this, and then I learned about Fibonacci retracements, and now Fibonacci retracements moved me to wave theory, and wave theory moved me to Elliott wave, where I studied it extensively. So you're like, what's your point, Fibonacci? We understand you're a good trader. Is that there's a difference between a money manager and a trader. Just like there's a difference between an athlete and a fighter. This is the market. This is what you have to respect. And this is how the market looks at you. This is how the market looks at any amateur, like Mike Tyson looking at a fighter. And before you invest with me or a money manager or whoever, understand that the market will kill you if you don't have a strategy and you're not good at trading. And what I'm teaching is trading. A 5-minute chart, 3-minute chart, minute by minute. Pattern day trader, equities trader. There's my resume.
And he is back.
He's back.
Introducing the one, the only Mike.
So you're kind of intense, Fibonacci, and that doesn't really work well for our San Francisco boutique trading firm. But I'm like, yeah, because I fought the market.
Once again, here's our referee in charge now to give instructions. Mills
Yeah, I know what it's like to wake up and wait for the opening bell to see if all my decisions are right or wrong within the first 10 minutes.
This is the Nevada State rules only.
Boom.
Protect yourself at all times. Expect a tough, clean fight. Any questions from McNeely's corner? Any questions from Mr. Tyson's corner? Let's get it on.
See him, he's trying to make nice with his fighter. I'm like, nope, the market's going to kill you. Have a strategy. And then be able to perform that strategy and be able to perfect that strategy. And I think you should be able to call any money manager or trader that you've invested your money with and say, Let's talk about today's activity from an Elliott wave technical perspective and Fibonacci. He's talking about that. He went to the third wave with the jobs report, but notice that the third wave's done now. Money manager, what's your strategy for the fourth wave in these next 1 to 2 weeks? Like, well, we're going to talk to some analysts in New York to answer your question. So here's the thing. There are money managers and there are traders, and I'm a trader. Email me, americano417@gmail.com. Go to LinkedIn, look at my resume, Jonathan, and then email me, americano417@gmail.com. There is a difference. And that distinction, especially now, especially post-Madoff, the fact that most of our banks are trading with quants, and quants are really just, they could be very dangerous to the markets, and what happens when Quant Technology takes over from traders, and is that good? And do you want to start asking your trading firm questions like, how much of your trading is done by quants, which is a computer-generated algorithm? And you're going to notice that we're moving away from trading to algorithms, which are not inherently bad, but whenever computers are making those decisions and not humans, now we have a problem. And I won't even go into flash crashes and how algorithms are they're just as dangerous as any other military or political force. But who's talking about the risk of a financial structure because of trading done by algorithms and not humans? What's the answer? Traders learning how to trade and humans trading the market. You're like, isn't that the way it's done, Fibonacci? Because your perspective's kind of like you've been smoking like too much. Anyway, we all have a perspective. And there's my resume. Email me, americano417@gmail.com.